Good morning, fellow builders. In this video, I actually will be describing what builders should actually look out for before they buy in any stock. When buying any stock, there are three key questions that should come to your mind, which is the company growing? Number two, is the stock expensive or fairly priced? And then number three is the company financially safe? So if you've answered all these questions, which I would help us to answer the question here, helping us to navigate through the stock plus product. Yes. So for the sake of this video, I would be using Nvidia. So we click on Nvidia, the first stock here, and just looking at the chart alone, we can see that Nvidia has been doing well. The first thing I want us to look out for is the revenue growth. So let's go over to the financial. So we want to know if the company is actually growing in revenue. So if we check, actually beats the estimate, and that is what we want to see in a company. And then the second thing is we head over to the EPS growth. Now, the EPS growth actually shows us whether the company is becoming more profitable. Okay, if the company is becoming more profitable. So as we can see now in Q2 2026, we have that the company had 46.74 billion and it actually grew to 81.62 billion. So that actually gives us a good start. The next thing to look out for is the PL. Now, the PL actually helps investors to understand how expensive the stock is based on future earning. Under this PL, we have the EPS, we have the ROE, we have the revenue, net income. So all these things should actually come to your mind when buying a stock. Now, the next important thing we want to check is the free cash flow. Now, the free cash flow is actually the lifeblood of every business. So companies with strong cash flow can invest, they can innovate, and also survive difficult market conditions. So you want to check this free cash flow if it's actually worth your investment. And the next thing you want to check now is actually the stock valuation. So we head over to overview. So now in this overview now, we want to check at just PE, BP, PS, and the dividend yield. So now PE is actually the price to earning ratio, and this actually shows how much investors are paying per dollar. And the PP is actually price to book, and it compares the company's market value to its actually asset. And now the next thing we want to check is the dividends yield. That is most important. The dividends yield to check if this company actually yields good dividends. And as you can see this now, like in 1 year, this company Nvidia has increased by 0.14%, and that shows a good growth. And now let's head over to the risk part where we do the risk check. The first thing we'll be doing is we'll be checking the net debt that the company is owing, because it actually shows how much debt a company uses compared to shareholders' equity. Because now lower debt actually means that the company has a lower financial risk, because you don't want to invest your money in a company that will crash. So we head over to financials. Okay, so the financials of Q1 FY 2027. So we click on them. Okay, then we'll see the reports. Okay, the financial performance, the revenue, and then the financial statement, the total asset, and then the debt. Okay, this is where we want to focus on. And now, seeing this debt for Nvidia is actually inconsequential. It can't bring down the company finances, because this is just 64 billion compared to their total assets of 259 billion. And then we can also check the net debt by going to the cash flow, I think. Yes, no, like the balance sheet. So on the balance sheet now, we put it on net debt, and then you can see it's the Q1 we had 43 billion. So having said this now, in conclusion, I know this might actually have taken up to 5 minutes. It's a long video because I actually wanted to explain in details. So, but what you should bear in mind in conclusion before you buy any stock is these three key questions. Is it growing? Is the company growing? Is it too expensive? And is it financially safe? And I believe that with this little illustration and explanation, that we can trade smart and manage our risk. Okay. I would love to see you guys in the next episode.